Hello everybody, welcome to my second video here on YouTube. I know that I initially in the first video said that I was going to focus on benchmarking 5 solar companies. However, after some thorough consideration, I have decided to instead go ahead and do a benchmark of the oil and gas supermajors, which is namely Exxon Corporation from USA, Chevron Corporation from the USA, Royal Dutch Shell from Holland, but also a bit American company, BP from United Kingdom, and Total from France. Exxon is the biggest company, followed by Chevron, Shell, Total, and then BP in the end. All these companies are both present in upstream and downstream, and some of them are also working in the midstream. But the biggest part for them are still by far the upstream industry. Some of them have also started to transitioning into renewables, and we will come to that a bit later in the video. So as we can see, if we go to the stock performance looking for the last approximately 1 year's time, we will note that more or less all the companies are in the red zone. That is by far no surprise, considering initially the price war that broke out between the shalers in the USA, and then Saudi Arabia and Russia on the other side. Then afterwards, the more strong indicator was obviously the issue that we are still facing today with the coronavirus, which smashed the oil price down a few months ago down to below $20, but they seems to have now stabilized around 40 to 45%, depending on whether we are talking about VTI, which is mostly used in the US, and the more common worldwide price of Brent, which is again used on a more global scale. If we take a look at Exxon, they're down with 44% year to date. Chevron is down with 32.01%. Shell is down with almost 51%. BP with 45.57%. And Total, the one who has had the lowest drop, has only been 29.24%. I obviously want to look into how are the companies performing from an income statement perspective. And if we look at the net income, you will see that it's only Exxon who has a positive result. However, it is very important to note that all the other majors have done write down on their assets. They have done impairments. That is not something that Exxon is known to do, and they have therefore not had any write down. They have said that they are potentially going to do this in the end of the year, depending on the further development in the oil price. So it's very important to note that if Exxon was to do an impairment later in the year, it will probably be a huge one like the one that BP did. Again, so if we look at them, it appears that Total, which had a write-down of approximately $8 or $9 billion, have actually done fairly well. A high contributor to this are the traders who are basically buying and selling oil and gas. So they have obviously hit the market at the good time when the prices started to fall, and vice versa. They have been selling crude at a good price afterwards, which has minimized their losses. If we go now to the gross margin, operating margin, and net profit margin, you will see here in the benchmark info that it says industry. So they are basically going to be benchmarked with industry data. So again, a company like Exxon may have a positive gross margin of 19.83. However, as the industry is above this, it seems like Exxon is underperforming the industry still. Again, industry data, sometimes it's a bit of a lagger compared to the quarterly results that we have just seen. So again, it needs to be taken with a little bit grain of salt given the extreme situations that we have appeared. But again, it is worthwhile to note that Exxon does not seem to be performing as well as the others. Also, when you benchmark them against most of the other super majors, namely Chevron, Shell, and then Total, who has actually been doing fairly well, both on their gross margin, but also on their operating margin. I have marked the net profit margin with a yellow color, and this is just to illustrate that this is something that is usually very important to me, because in the end of the day, that shows whether the companies are earning any money or not. And obviously, for the last 4 quarters, all of the companies except Exxon, but again note that they didn't do any impairments, have been smashed hard, and therefore the company has had to take losses. It doesn't mean that the underlying operations are not doing well, but it means that some of their assets is not as much worth as it was yesterday. Then I've also included the Beanish M-score, which is a model or score that can show whether a company is manipulating its earnings or not. So what we want for the companies is to have a score below minus 2.22. And as we can see, both Chevron, Shell, and BP are doing fine on this. There is no reason to doubt their earnings. The Sloan ratio is another one which can basically see if the business or the company is not doing any funny business with their accruals. And again, Exxon is doing pretty well here. However, Chevron and BP are in the light yellow colored score because they are below minus 10%. We want the score to be between minus 10% to 10%. So again, there's not any huge concerns here at the moment. Then this is obviously closely connected to the following section, which I call return metrics. This is again an extremely important section. As you will see here, there are several of the different lines that has been marked with the yellow light color. The earnings yield, we are benchmarking that against the S&P 500 average, and it is only Exxon, but again not considering any impairments, that has been performing well. So again, no surprises when we look both on return on equity and the return on invested capital. The company has not been doing well, also benchmarked against the industry, which again is a lack at the moment. So the company is maybe still doing overall okay. However, what is more important to me quite often is the cash return on invested capital. So this basically still mean, are they generating any cash for the invested capital? And here, interestingly enough, Exxon has a minus 0.49, while as all the others has a positive. And very interesting here is obviously to see Chevron returning 7.57%. Again, then we go to the levered free cash flow margin, which again shows a similar pattern. And this is just to illustrate that Exxon may be looking or appearing to do well without the net income and the consideration of the impairments, but when you benchmark them, how their performance is when they have met all other obligations on the levered free cash flow margin, they're actually doing extremely poorly compared to their competitors, where both Chevron and Total is standing out as to be doing really well. The next section focus on the balance sheet, which is another critical element, especially for companies with poor numbers on the income and return metric session. This is both the case for companies that are growing or simply not performing well, as I will want to understand if they have a strong enough balance sheet to cope with this, or whether there is a high risk on them having too high liabilities. So what is very interesting here to look at is, first of all, how much cash these companies have on hand. And why that is the case, that is because in the oil and gas industry, once there's a crisis, that usually means that there's a lot of companies going bankrupt and assets or companies comes up for grasp for a good price. And usually these oil and gas majors, they use this as an opportunity to buy cheap assets or companies. Chevron is the only one so far that has moved in this area. They bought Noble Energy for around $15 billion, but none of the others have so far done anything in particular. However, it is interesting to see that both Chevron, BP and Total has very good on the cash and short-term investments. So it could be that these companies may use some of this to grow. Otherwise, a very important aspect is the total ratio, the total assets versus total liabilities, and I would want that to be at least above 1.5. All companies except BP meet this criteria, which is very good. The same goes with the debt equity ratio, another very important one, where all of them are doing fairly okay in my book. The Altman Z score has been included, which is basically to show the likelihood of a bankruptcy, and all companies below 1.8 gets a red mark. That's just a red flag. So both Chevron, BP and Total has, especially BP and Total, does not have good numbers, which was a bit of a surprise to me. However, I still wouldn't be too concerned with them, given the fact that I think that this is just a short-term periods and these companies will definitely weather the storm. The Piotrowski score has also been included just to assess the strength of the financials of the company. And again, Exxon is so far doing the best out of all the majors, but again, the impairments may have an impact if they do so later in the year. Then we go into the shareholder yield. How much value are these companies returning to its shareholders, either through dividend and or buyback? There tends to be a heavy focus on dividend, which I think is a bit wrongly, as buyback has become a priority for a lot of companies within various industries. So therefore it is extremely important for me to include this. What I want to note is that, again, need to be a bit careful with the numbers, as some of these companies like Shell and BP has just been cutting their dividends. So even though the dividend yield looks very gracious here at 11.47% for BP and astronomically 17.18% for Shell, this is not going to stay like this for the future for these companies, as they have cut the dividend. However, the other companies like Total, Chevron and Exxon has so far not cut the dividend, so they could be at risk, but they are more safe place right now than the numbers of BP and Shell, which has obviously been cutted. Same goes with the buyback yield, which we are benchmarking against the Q1 from S&P 500, and all companies except Exxon is actually doing fairly well on their numbers. But again, a lot of these buyback has been put on hold given the current situation, and we therefore cannot expect that these percentages will hold necessarily. That leads us to the total shareholder yield, where overall Shell is by far the best company, closely followed by BP and Chevron. But again, be cautious with these numbers for these quarters, as it may look vastly different going forward. I would say, from my point of view, Chevron and Total at the most safe place at the moment to give a decent total shareholder yield out of the group of these 5 companies. I have some concerns with Exxon, which is again highly due to the modified payout ratio, which is above 100%, meaning that they cannot sustain this for a long term. And I therefore again see Chevron and Total as more safe place if you have a strategy to go for dividend or buyback yield. Looking at the earnings per share and growth going forward, Exxon is the only one having a positive one, which is by no surprise. All the other ones are negative. Going ahead, the earnings per share is going to be positive for the next year for all companies, which are good. However, the growth forecast for the next 5 years are a bit doubtful for some of them. Exxon seems to be doing quite well, and the same with Shell, but all the other ones are, if not minus, then close to minus in growth going forward, which is a little bit of a red flag to me. The same goes, obviously, if you look a bit at the revenue growth and the net profit growth, that has obviously been extremely poor for the last 12 months, given the crash in the oil price. Then we move into the estimation as to whether the companies are over or undervalued, and we have a few different ways that we can look at that. First of all, we can look at the PEG ratio. Again, the difficulty this time is that as all the P's are negative, you cannot really assess this, so we can only look at Exxon, which again does not really make sense as is today. But if we should, but then according to below 1 means that a company is undervalued, and above 1 they are overvalued. Exxon is at 1.8, which means that they are overvalued as of today. Then we can look at the fair value, or my own estimated intrinsic value of each company, basically to see if they are overvalued and undervalued. I use a lot of different variables to determine whether the companies are potentially a good buy or not. There's obviously uncertainties and a lot of assumptions associated with this. However, if we look at all the companies, there's going to be an upside on Exxon for today's price from 13.15%, minus 3.4% on Chevron, minus 13.46% on Shell, plus 17.43% on BP, and the highest among the group, 26.35% for Total. You can also look at some other indicators like the book value per share. And again, if the book value per share is above 1, they are considered undervalued. If it is below 1, they are considered to be overvalued. And all the companies except Chevron are considered undervalued. Another measure is to look at the relative strength index for the last 14 days. Below 30 means that they are oversold, which makes them in general attractive. Above 70 means that they are overbought and they may therefore retract back a bit. So there you need to be a bit cautious. We can see that all of them lays around the 30s except Total, which is around 51.33. Again, no risk here. They're neither in overbought or in oversold territory. So I would say it's quite okay. Lastly, we can also look at the analyst recommendations, and again, there's a hold on Exxon, buy on Chevron, hold on Shell, and a buy on BP and Total. I just use this as a general indicator for what the analyst says, not that I always take it for granted because they can have their own agendas, but again, if they are quite aligned with my own estimates and my own perception of the companies, that's always a good thing. And again, for quite a few of them, there's a good upside from today, which is a bit surprising considering that it's hold for both Chevron and Shell, but they still have a quite good upside. But all of them appears from the analyst side to be on the upside at the moment, but I would be a bit cautious with that. I want to stress as well, I mentioned that a bit in the first video, that all of these companies are in an interesting position as of today because we are seeing slowly a transition to renewable energies. And a lot of these companies are taking a different approach to this. You have the American companies like Exxon and Chevron, who has almost done nothing within this so far, while as both Shell, BP, and Total are kind of like leading the way within the industry and are starting to set pretty ambitious targets for this. There's no doubt in my mind that it seems to me that investors are looking positively at the companies who are actually doing something. They may be doing a bit of greenwashing, who knows, But in my opinion, it seems to be that that is valuable compared to companies who don't do anything. Because if you don't do anything, there's a risk at a certain point in the future that you will basically die because there's no longer need for your products or services. I'm not saying that is the case for Exxon or Chevron at all. They still have time to go and follow the European majors, but they are lagging behind so far. So this leads me in the end to which one do I see as the strongest play within all the 5 super majors. And from my point of view, if I should pick one as of today, I would go with French Total. The simple reason is that they have been performing very well. They're moving into renewables at a quite rapid pace. Their operation seems to be going well. They're generating cash. Could have a little bit concern about the balance sheet statement, which we looked at earlier. However, the debt equity is quite low still, and I therefore think that they are among all of them the safest options to get a quite generous return going forward. They have also stated that their dividend is safe for now, which is very, very good, and which is not too surprised considering their payout ratio as of today. So again, if I should go with a company, I would definitely go with Total. Keep in mind that I'm not a professional investor. This is just my own interpretation, own estimates, own assumptions of these companies, and I therefore highly encourage everyone to do their own due diligence. If anybody has a different opinion or has anything they want to add, please do so in the comment section. Otherwise, I hope that you like this video, and please, if you do, subscribe and like for more content going forward. Have a nice day.